Hello everyone, it's Friday, May 15, and today we will examine the charts for the euro and the British pound to identify potential market moves. Both the euro and the British pound extended losses against the dollar yesterday, pressured by expectations that persistently high inflation in the United States will eventually prompt the Federal Reserve to take action. Before Kevin Warsh was announced as the new chairman of the central bank, there was little expectation of a shift in monetary policy, particularly given Jerome Powell's stance. Now, with the newly appointed Fed chair in place, uncertainty has increased. On the one hand, Warsh is a candidate put forth by Donald Trump, who has advocated for interest rate cuts. On the other hand, rising US inflation suggests that the economy may be overheating, which would necessitate the Fed rise in interest rates. In this context, the euro, pound sterling, and other risky assets are losing ground against the greenback. Adding further pressure on the British currency is the ongoing political crisis within the UK government. There's a growing concern of the loss of confidence in Prime Minister Keir Starmer's leadership, as well as the ambitions of Manchester's mayor. Traders are worried that if Starmer steps down, both his administration and efforts to reduce debt levels could be jeopardized. This has resulted in significant shifts in the bond market, putting additional pressure on the pound sterling. As for the Strait of Hormuz, Trump has yet to make any significant statements following his return from Beijing. However, he mentioned yesterday that it no longer matters to him whether the straits open or not, while adding this a reopening would be positive news. Meanwhile, there are no active military strikes or noteworthy remarks related to the situation in the Middle East. Turning to today's macroeconomic calendar, there are no significant news releases from the euro area aside from the ECB economic bulletin and Italy's consumer price index. On the US side, the calendar includes the New York Empire State Manufacturing Index, which is expected to indicate a slowdown in May, along with data on US industrial production, which is projected to show an increase in April following a 0.5% decline in March. If these readings come in better than expected, the US dollar could extend its bullish run. However, these reports are unlikely to have a substantial impact on the currency market, where the greenback is currently enjoying gains. This trend is not expected to reverse in the near term. Now let's turn to technical analysis. The 1-hour EUR USD chart indicates that false breakouts at 1633 and 1613 could present buying opportunities. Going long on a rebound would be relevant at 1592, targeting an intraday correction of 15-20 pips. Conversely, short positions could be considered on the false breakouts at 1.1657 and 1678, or on a rebound at 1701 with the target of 15-20 pips. Regarding the British pound, the trajectory will now hinge on the political situation in the UK. Buy entries may be initiated on a false breakout at 33.50 with a potential for recovery to 33.81, especially given the lack of significant fundamental releases. However, if buying activity at 33.50 is subdued, it would be wise to delay long positions until the price reaches 33.17. Alternatively, traders could consider going long on a rebound at 32.83, targeting an intraday correction of 30-35 pips. For selling opportunities, entries would be appropriate on the false breakout at 33.81. However, it is important to note that by the end of the week, buyers may attempt a more substantial upward correction. Therefore, bears should consider entering on a false breakout at 34.16 or on the rebound at 34.55, anticipating move of 30-35 pips. Good luck to everyone and have a great weekend.